What's up? This is Rudy for Bester Investor, or otherwise known as Mr. Oxy. I'm not sure I want to be called Mr. Oxy anymore, not after the last few days, but anyway, here we are back with some news on Occidental. And my question to you guys is now we got Oxy at $10. I accidentally said greater than $10 today, it dipped below $10. What's next? Are we going to $5 or are we going to 15? Anyway, it's October the 1st, 2020. Another miserable day for Oxy longs. So let's quickly take a look and see if we can figure out what's going on with this stock, which makes you feel every day as if you're catching a falling knife. So firstly, Oxy and energy. Let's take a look at what's happening with Oxy in the marketplace today. Trading in a range of about $9.50 to $10 for most of the day. The volume was sort of average, 26 million, 27 million shares traded today. We're touching the all-time low. Once again, we're not too far away from that. It's very, very volatile. The market cap has dropped to just $9 billion. It's hard to believe that here we are sort of a year after the acquisition of Anadarko, and the combined value of Occidental and Anadarko is $9 billion according to the market. Quite extraordinary and not something that we see every day. What else is interesting here? Not a lot of change in institutional investors' holdings, about 67%. And the short interest actually remains around 5%. So interestingly enough, the short interest is not very high in Occidental despite its massive crash over the last few weeks and certainly over the past year. Today, we closed at $9.68. It pains me to say that, down 3% today. However, if you look at energy stocks in general, they were all tanking today. Some of you may know that I also own Total as an example, and that went down about 2.5% today. So not a great day for energy. Interestingly enough, the crude is remaining quite solid at around $40 and Brent at around 42. So you know, it's not all bad news, but it certainly doesn't feel good. So what happened today? So some news today. Oxy said it agreed to sell some of its onshore assets in Colombia to a private equity firm, Carlyle Group, for about $825 million. The deal includes an upfront payment of $700 million, and the balance will be payable based on some production and commodity milestones or price targets. The sale is expected to close by year-end 2020, and it includes, and I'm probably going to destroy these names here, but it's Llanos Norte, Middle Magdalena, and Putumayo basins. And Oxy is keeping its exploration blocks offshore in Colombia. By the way, I love Colombia. I was there just a couple of years ago and visited Cartagena, and also went to Medellin. Cartagena in the summer is a place you want to avoid. It is so hot. I currently live in Florida, and in Cartagena, I felt as if I stepped out of Florida into a sauna. Anyway, by now we probably all know that Oxy has announced more than $2 billion of divestitures that it expects to complete this year, so it's well on the way to doing that. Just recently we had the $1.3 billion asset sale. Now we've got another $700 to add to that, so that's $2 billion already. CFRA today upgraded Oxy from hold to strong sell. So I'm not necessarily sure that upgrading something to hold from strong sell is going to make everyone happy. But heck, it's a lot better than the other way around. CFRA's 12-month target price remains at $11, which reflects a 7.6 times multiple of enterprise value to projected 2021 EBITDA. Well, I don't really like EBITDA, but it's okay. That's what they do, and they're the analyst, and I'm just reading their information. And then they say their projected per share loss for 2020 is $3.56. I think that's pretty much in line with most expectations anyway. But they've narrowed the 2021 loss by 34 cents down to $1.51. That's quite a substantial improvement. So we'll have to see how that transpires, because 2020 is a good guess and 2021 is less of a good guess, because there are too many things that we cannot control and for sure that we cannot know. The upgrade is based on valuation, especially since the shares are down 45% over the last 3 months and a 16% decline versus peers. A little bit more from CFRA. They say Oxy remains debt laden, but it is making progress on non-core asset sales, including obviously the deal that I just talked about, which was announced today in Colombia. In addition, its upcoming payment to the Berkshire Hathaway prefers is going to be in cash, which creates at least a degree of optimism, either by management or by long investors or by both. Certainly gives me a sense of optimism, but at this stage of the game, to be fair, there's so little to be optimistic about that even for a generally optimistic and positive person like myself, I'm almost digging for good news amongst all the carnage that we see on a day-to-day basis for Occidental. And then CFRA says the biggest catalyst for Oxy would be a recovery in crude oil prices, but that is unlikely in the short term. I think that's probably somewhat stating the obvious, and we have no idea where crude is going to go in the near term. For some of you who have watched my previous videos, I did stick my head out and my neck out and say it's more likely that we're going to see WTI at $40 than $20, and that was when we were trading at about 30. So that prediction, which was also a guess, fortunately was something I was correct on, but who knows what happens with crude on a go-forward basis. Oxy's debt, I mean, this is obviously one of the things that worries most of the analysts the most, and analysts need something to be worried about, because otherwise they can't tell you any bad news. The most recent balance sheet, which was still dating back obviously to Q2 of 2020, which was announced on August 10th, showed total debt of $38.5 billion, and adjusted with the $1.1 billion that they had in cash equivalents, the net debt was $37.48. Now things have changed significantly over the last quarter. Firstly, we've had WTI at around $40 for most of the quarter. Secondly, we had some debt tender notes and offers that were successful. Obviously, we've had some asset sales as well, which generated some cash and put some money in the bank. So I have a very good feeling that Q3 is going to be very different to Q4. The bad news is we have to wait a whole month, more than a month, in fact, to get the third quarter results, because that's only going to be announced early in November. Based on the Q2 results, Oxy had approximately $90 billion in total assets, which put their debt ratio at 0.43. We need a debt ratio of greater than 1. Otherwise, the company is not in a position of using its cash and cash equivalents in order to settle its debt and interest payments on the debt. So what now? You know, it's tough because for those of you who've been following me, you obviously know I'm optimistic about Oxy. It's undervalued, and somewhere along the line, it's going to be a turnaround stock for us. My message here is I don't think we should panic. There's no question that Occidental is super cheap. Now, sometimes stocks are super cheap for all the wrong reasons, and Oxy kind of did this to themselves, which is just a combination of bad timing, a pandemic, and a crashing oil price, which is again related to the pandemic. And you know, so from a macro point of view, you cannot control the energy price. And the Anadarko acquisition was just ill-timed for too much money. They paid too much for that asset. But you know, this is in the past, so let's see what happens on a go-forward basis. So I did find these two little analyst notes in the news reports. Morgan Stanley's Devin McDermott recently raised his rating on Oxy from equal weight to equal weight from underweight, and his price target $14. So that doesn't sound like much, but that's 40% up from where it is right now. And JP Morgan analyst Phil Gresh raised the stock to neutral with a price target of $19. He made some interesting comments. He says he likes the stock given a magnitude of underperformance, the de-risking of the maturity wall, the recent stability in the oil price, and he also talks about its oil price torque. So we'll have to see where this goes. If it lands somewhere between $14 and $19, I'd be a happy camper. And I'm sure most of the people who follow me and have been watching some of my Oxy videos would be quite comfortable in that range too. I mean, guys, imagine if Oxy is trading at 15, 16 bucks, sort of in the middle of that range. I think most of us would kind of feel okay and certainly a little bit more confident. So where does Oxy go from here? So how about you guys tell me? We're at $10. Are we going to $3 or are we going to $13? Let me know in the comments. And guys, if you like my videos, please hit the subscribe button. This is Rudy for Best Investor, or otherwise, if you insist, you can call me Mr. Oxy. Signing off, saying have a great day, and I will see you guys soon. Take care. Bye-bye.